balances that you need to bring into Sage. Now, I just created GT Bank as an account today. It doesn't mean I don't have balances in my GT Bank, bank account, right? And for your software to be able to show, a true picture of what your business, is currently, what your business currently is. Sorry. So there's need for you to bring in balances, right? So that whatsoever you are having, as maybe when you are generating income statement report or any report in the system will consider, what your customer is owing you. Your customers, what they are owing you before you started using Sage. That also the system would want to consider what your bank balances were before you start using an application. So before you use an application, you need to ascertain, do I have balances? Is anybody owing me? Am I owing anybody? Do I have any balances in the bank? And that is what you mean by opening balances. So it is opening balances an integral part, a very good part in you using the software. So, and in some softwares, if the management decides that, we don't want to bring in any opening balances in the system, yes, they can do for some categories of ledger, maybe income statement ledgers, expenses, revenue, you might not bring in opening balances. But for balance sheet items, you can't tell me you don't, except you don't have balances in the bank, except your company does not have any building, that they have ownership on, except they don't have company vehicles, company printers and all. So that is the only time you won't have opening balances. But that is, a simple idea of how opening balances work, right? Now, before we now do transactions, let's bring in opening balances in the system, right? And opening balances, we have two options of doing it. You will notice at the point of creating a record, there's provision for us to do that, right? But we won't, we intended not to go that route because the system has, opening balances as a feature, right? Opening balance. So if you go to your company now to do opening balance or to access opening balances, you go to company, right? The company module, then the last list there you have opening balances. So you click on opening balances. Okay, let me be sure my okay, you all so please confirm if you can still see my screen and if you can still, hear me audibly, so that we'll be rest assured that we are all carried along. Okay, so let's see. Okay, cool. All right. Thank you so much. Thank you, everyone. Okay, so now this is our opening balances screen, right? And if nothing, opening balances will be important for balance sheet accounts. And what are those things you need for your opening balances? That is also an important part that we need to note. When we just say opening balances, let's not just get frightened. Opening balances, there are things needed. It's just like, let's say you want to undergo an audit exercise, an external audit exercise, right? There are some things needed, right? And it's just in line with these opening balances we intend to look at now. So opening balances, can be tagged as closing balances too. It just depends on the period, we are the period and the context at which we are using it. What do I mean by that? Now, if we have, our reporting period, our training reporting period is from January to December, right? So our last financial year end date is 31st December of every year. So the way it works is this. Our closing balance as at 31st of December 2021 would be our opening balance as at 1st of January 2022. So now, so that's what I meant by saying opening balances can also be tagged as, closing balances depending on the context. So I'll take it again. Your closing balance for your previous financial year end or as at a financial period, right, would form your opening balance for the next financial period or financial year end, right? So, but the only thing will just be that well, it will be just that rather. It's that opening balances, that opening balance as at 1st of January 2022 would only be applicable for some set of ledgers, basically your balance sheet accounts, right? Now, your income statement account, your profit, all of those things, as at 31st December 2022, your net profit and all would have been written off to your retained earnings, right? So when you are starting 1st of January 2022 and you are checking opening balances within your system, right, you would only be saying, for balance sheet accounts, income statements, they are only, they've done their part. So closing balance, when you hear closing balance, you hear opening balance. So don't get confused, right? The closing balance of a period, would form the opening of another. That's it. But when you now talk about a financial year end, it's just that those balance sheet accounts, the closing balance of a balance sheet, set of accounts would form the opening balance, in the next financial year end. I hope